This is probably the biggest point for Bitcoin in its history. Stock to flow ratio of Bitcoin will be greater than that of gold after this halving. So Bitcoin's not a CPI inflation hedge. Bitcoin is a monetary debasement hedge. And this is something that even myself, I made this mistake in kind of back half of 2020 into 2021 thinking. And, kind of with the benefit of hindsight, towards the back half of 2021, as CPI inflation ran up, I think a lot of people became confused once Bitcoin started to roll over kind of the end of November into December of 21. But, kind of seeing it through the lens of being a monetary debasement hedge, it makes total sense, right? Because kind of the asymmetry of where you should be expecting liquidity to go from there was towards the downside, given the Fed was probably going to tighten monetary policy to combat inflation. And so I think now you've kind of got the inverse of that. So you've got inflation coming down now. And so it's okay, well, what's kind of the asymmetric profile of liquidity from here? It's very much skewed to the upside from here. And I think, on the back end of that, so should kind of your expectations for Bitcoin. And yeah, I think, there's a couple catalysts over the next 6 to 12 months that are incredibly positive for Bitcoin. I don't really have an edge in kind of predicting, the short-term price, at least at the moment. And I'm not doing so. I basically have the highest conviction in kind of where Bitcoin trades maybe over the mid to long term. And I've got my portfolio constructed accordingly. We've got the ETF coming up on the horizon. I have no idea if it's, buy the rumor, sell the news, buy the rumor. I have no idea. You just gotta, look at the price action and kind of derivatives positioning going into that. I will say, we've seen a ton of CME open interest, which is most likely, like kind of TradFi, hedge funds, maybe high net worths that are putting on the ETF trade. And that OI probably has to kind of get unwound around and probably will around the ETF. So maybe we see some kind of chop, between the time of the approval and the listing itself. But, I think when you kind of zoom out, this is probably the biggest point for Bitcoin in its history. Kind of the legitimacy and, like decrease in career risk that's brought on by that stamp of legitimacy of an ETF, the potential unlocking of passive flows, and then not to mention kind of the mass marketing blitz from all these massive financial institutions that are going to try to get people to basically buy into this fee generation machine for them. I think all of those things shouldn't really be, underestimated. The halving in itself, does the halving actually have a material effect on the actual supply demand function of Bitcoin? I kind of lean in the camp of not really, but yeah, I think it's a great meme. And, and look, like after this halving, I think like the big talking point for Bitcoiners is, I know a lot of people aren't too fond of the stock to flow pricing model, but just the stock to flow ratio of Bitcoin will be greater than that of gold after this halving. So, and then also, I think the other thing that not many people have talked about, and I think people have talked about the fact that it's an election year, but the likelihood of us seeing either Trump or Vivek or one of these, more conservative candidates probably getting into office in the back half of last year. I think that would be a really especially Trump would be a very positive thing for the market as well in terms of, if he were to step in, he probably comes in and just tells Powell to cut rates. So yeah, I think there's a ton of positive kind of catalysts on the horizon for Bitcoin. And, I'm just sitting comfy in spot for the next kind of 12 to 18 months. The quality is a byproduct of, 15 years of monetary debasement via QE and just the dollar depreciating over time, right? Let alone if they're backstopping things just over time, the people that hold assets are continually benefiting by, the amount of monetary units in the system increasing. And so, creates wealth inequality. But the other thing is, if you see that translate to, over time actual price inflation on things that people are buying in their everyday lives, you basically create this incentive for people to want to like hyper speculate on everything. If you go back and read the book, When Money Dies, I read it like 2 years ago. But it's basically about kind of all the activity that took place around, Weimar Germany. And I'm not saying that the US is going to go into hyperinflation, but on the very extreme end of this, what you saw during that time period was asset prices mooned because, the denominator's increasing, but also just the amount of speculative activity in markets just went through the roof. And so, one thing I think a lot of people know that I started off very much kind of Bitcoin only, strictly focused on that, didn't even look at anything else. The thing that kind of opened my mind to shifting into looking at other things is on the same coin of you should expect Bitcoin's price to appreciate because monetary debasement is programmed because they have to print more money to service the debt. The United States does. On that same note, not only should you see money flock to hard assets, and I believe that that'll be mostly Bitcoin, and Bitcoin will devour that entire pie, will become, the biggest monetary premium beneficiary of any asset. And that's, believe that there's going to be a ton of speculation. And this is kind of the whole thesis of, the hyper financialization of everything, right? And I think crypto is kind of the cleanest recipient of all that activity. A lot of people say crypto is strictly speculative and it's inherently speculative. I think that's true. And I don't think that's necessarily a horrible thing. But I think the same kind of argument, and maybe a lot of the maxi crowd would push back and say, well, Bitcoin is kind of the surest thing. I don't want to participate in that type of stuff. That's fine. But I think, when you kind of lay it out on the same coin of believing that Bitcoin should appreciate in price because of monetary debasement, you should also acknowledge that there's probably going to be a massive influx in kind of speculative activity around that. And again, I think the largest beneficiary of that is crypto, in addition to kind of broader gambling, that might also be brought into kind of crypto native applications as well.
Curious to get your thoughts on is what's going on with Ethereum right now.
Yeah, I think like what's taken place over the last couple of months has really kind of opened up the discussion in the smart contract landscape of, very much just the first principles ground up view of, okay, like, what are we optimizing for here? I think interestingly, this kind of sets up a pretty good condition for some of these kind of higher throughput EVM based chains to do well. So we've seen Say run pretty aggressively over the last kind of 2 weeks. And I know Monad is launching sometime mid next year. These types of things are pretty interesting because you kind of take the best of both worlds from, kind of the high throughput side on what's really been driving the price action for Solana, whereas, still maintaining EVM compatibility. So, a lot of these, contracts can pretty seamlessly plug in. So that's kind of one area of the market. And Michael, I don't know if you want to get into this tweet I had about a couple of my theses I can show my bags. But this is one of the this is one of the theses that I think will probably do well throughout the year. Is these kind of smart contract platforms that sit at kind of the intersection of both Solana and Ethereum. I just think from kind of a mind share and narrative standpoint, it makes a ton of sense. BTC into ETH after the Bitcoin ETF gets approved, as people maybe shift focus towards a potential ETH ETF. And so I think it makes it even more interesting if you have Sol that's ran really aggressively throughout the years, up whatever 7-8x off the lows. And then, if you do have kind of a mini 1 to 2 month run for ETH, potentially around some type of ETH ETF front running, then it really opens up that discussion even further. And I think there's a pretty clean, kind of wide open setup for someone to kind of step in and say, hey, look, we kind of provide the best of both worlds. So I think, the L1 landscape's probably the most open for competition that it's probably ever been. When you look at Coinbase and the public miners, they both kind of have this over-encompassing kind of theme that I think is really interesting in terms of allocating to them. As a crypto native, I think with both of them, you have kind of this informational edge as a crypto native. And we could get into both, but to start with Coinbase, I think the street fundamentally views them as just a traditional exchange, and all their revenue comes from fees on the exchange. Meanwhile, I think Coinbase has built out several verticals over the last year, from everything from staking as a service, their base L2, wallet as a service. They have the offshore derivatives exchange. They just announced that they're going to prioritize pushing spot trading outside of the US. Also the Circle acquisition, which was brilliant, right? Because it basically hedged the monetary conditions in which their business does well. So, in periods of, when interest rates are low, their business typically does well. When interest rates are higher, then Circle's business is doing well because they basically just, issue the stable coin, back it with treasuries, and pocket the yield. And so I don't know exactly the percentage of Circle's business that Coinbase owns, but I think that was a pretty brilliant acquisition as well. And then, they have the SSA agreements with all the ETFs, or the custodian for the ETFs. There's a couple different verticals of the business that I think they've established over the last year that the street maybe doesn't fundamentally understand, or really is giving a ton of weight to. So native, you have kind of the almost informational arbitrage play to say, hey, look, we understand how these kind of crypto native verticals may benefit the business, especially in kind of a raging crypto bull market, whereas the street doesn't. And that's kind of where your maybe edges or where you're kind of expecting that repricing to take place. And then same, broadly with kind of the, cyclical nature of crypto. I think you can make an argument that kind of having the knowledge of this kind of crypto native cycle that maybe isn't getting priced in by these kind of trad firms into some of these public crypto equities. And then on the miner side, I think where you kind of have an informational edge as a crypto native is in basically having real-time data. In traditional finance, you don't know a company's earnings until the end of every quarter. Whereas with miners, we can literally look at, I can tell you right now, the amount of fees that were, printed by the Bitcoin network, what percentage that came from the block subsidy, and what percentage of that came from fees. And so, we can see in real time over the last, call it month or so, we had this initial kind of run up in ordinals activity at the end of March, early April this year. A lot of people said that was just a flash in the pan. We've seen that start to run back up. I think very rarely do you want to kind of like fade the second bubble of something. So we'll see if they have staking power. But, I think if they do, the street's not pricing in, I think, higher Bitcoin prices, but then also, kind of sustained activity for ordinals. If you go and look at fees, I mean, we're sitting at, 500K to 750K, like kind of on average roughly throughout Q3. I mean, fees on Saturday were $23.6 million. I mean, that's insane. It's like a 40x increase in fees. Like that, if that sustains, it's absolutely not priced in. So look, I think, if you're bullish on ordinals, you probably want to own a couple of these miners. Does the street continue to use MicroStrategy as that kind of purest, way to get exposure in the public markets to Bitcoin as opposed to the ETF? And Saylor went on, I believe, CNBC yesterday. He actually did a pretty compelling pitch, which is, basically MicroStrategy is a levered Bitcoin ETF with no fees, right? And when you look at, people keep talking about he's, diluting shareholders because whenever MicroStrategy trades at a premium to the underlying, he issues shares, buys Bitcoin, and that's diluting shareholders. But in Bitcoin terms, it's not. If you look at the number of Bitcoin per share, that's been going up only since inception. So I think in a lot of ways, MicroStrategy is a really interesting way to get exposure, even with the ETF still alive. And I think it'll be interesting to see, does that kind of premium persist after the ETF? Because I think that you can make an argument that that's there because there's no other really pure way to get exposure. But I would guess Saylor is going to continue issuing equity as much as he can to keep stacking Bitcoin.